Welcome to your monthly investor check-in. This time we've got Pacome and Brad from the investment team. Let's hear what they've got to say. The death toll from the coronavirus in China continues to rise. What are the effects?
Well, the news of the virus had actually limited impact on the market. So what we saw when the news broke out at the end of mid of January, we saw first the equity market going down as the number of cases and the number of deaths were increasing. But pretty quickly afterwards, and especially in the beginning of February, developed equity market reached new all-time highs in Europe and in the US. However, we've seen some other asset classes like commodities, the ones that are more linked to China, still remaining a bit impacted. It's true for metals and oil that are not to the levels they were in January.
Will there be knock-on effects of the virus globally?
Well, economically, there'll be a large impact. It'll be short-term, but it will be large. Centred around supply shocks, centred around cancelled travel, lost income to people, lost income to companies. Yeah, a large short-term disruption. And the market expects, though, China will offset this through policy expansion. And other countries, too, might also facilitate that shock by expanding their spending. And yeah, so the market is looking through this for short-term pain, but a medium-term it should neutralise.
Investors continue to pour money into bonds. What's your outlook for this market?
Well, it has been interesting to see effectively a lot of investors buying bonds and at the same time as well buying equity and seeing equity to new all-time highs. Equity is typically the most risky assets, but bonds, and especially US Treasury, is usually seen as the safest of all. So it means it's a sort of conundrum to see both of them reaching all-time high so far in 2020. Having said that, so what's the outlook for bonds? It might continue for some time. What we've seen is the Fed chairman, Jay Powell, last week hinted that if there is some cool down in the economy, it will come and potentially cut rates further. So there is some potential for bonds to continue on this trend. Actually, a last word on gilt. We've seen a bit of divergence last week between gilts and Treasury due to changes in politics in the UK. But for us, by having a mix of Treasury and gilts in our portfolio, we were quite immune to these changes, and we're looking to keep it that way.
We have a new Chancellor of the Exchequer in the UK. What can we expect from him?
Yeah, well, Rishi Sunak is a new Chancellor. He's going to deliver the budget on March 11th as originally planned. I don't think we expect a very big difference. He'll deliver the government spending, which is meant to level up the north-south divide. The biggest question really is how much money he will spend and how big he will allow the deficit to expand. But if they're successful in getting growth going, then that growth should pay for that deficit all by itself. The real question, though, is the elephant still in the room, which is Brexit, and that's something that the Chancellor can't control. What kind of trade arrangements will we have with Europe post December this year?